Ladies and gentlemen, good day and welcome to Adani Power Limited Q1FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nidhi Shah from ICICI Securities Limited. Thank you, and over to you, ma'am.
Yes, thank you, Amshad. Good afternoon. On behalf of ICICI Securities, we are pleased to welcome you all to the Q1FY26 earnings call of Adani Power Limited. Today we have with us from the management team represented by Mr. S.B. Kalia, sir, the CEO, Mr. Dilip Jha, CFO, and Mr. Nishit Dave, AVP Investor Relations. We'll start with brief opening remarks, which will be followed by a quick Q&A session. Over to you, Mr. Kalia.
Good afternoon, everyone. Thank you for joining us today to discuss Adani Power's financial results for the first quarter of 25-26. In the recently concluded quarter, Adani Power has again demonstrated its competitive strength and the resilience of its business model. In spite of weather-induced demand softness and a high base, we have delivered a quarter with great power dispatch and robust profitability. We have also expanded our capacity further by acquiring Vidarbha Industries Power Limited, which has 600 megawatt capacity that has been revived by us. This acquisition will expand our presence in the state of Maharashtra and provide further opportunity for growth. Apart from this, we have also received more than $500 million payments from the Bangladesh Power Development Board towards their outstanding dues in the end of June and July. The customer has been paying us now regularly. As a result, the outstanding receivables position has now been brought to near normal levels, which was so far an issue of concern. Now to talk about the operational and financial performance. During the first quarter of financial year 26, while the all India demand has shrunk by 1.6% due to early monsoon, Adani Power supplied 1.6% more power with 24.6 billion units as compared to quarter 1 of 25. You may recall that the first quarter of the previous year was marked by an intense heat wave, which led to a surge in power demand. While offtake under PPAs reduced due to weaker power demand in quarter 1st of 26, APL sales volume was supported by the additional 2300 megawatt capacity acquired by us last year and a higher short-term sales under bilateral and exchange models. Our strategically located merchant capacity continues to enjoy significant competitive advantage in the short-term market, thus providing a market-linked upside to our earnings. Consequently, APL registered a stable continuing total revenue of rupees 14,167 crores, healthy EBITDA of 5,744 crores, and a strong profit after tax of 3,305 crores in quarter 1 of financial year 26. Tariff realization was lower during quarter 1 of 2026 due to lower import coal prices in addition to lower short-term tariffs. In the short term, operating expenses are elevated due to the recent acquisitions. We are undertaking various initiatives to turn the units around quickly and improve their profitability. Now to talk about the long-term outlook, we are firm believers in the promise of the power sector, which is closely aligned with the India's economic prospectus. We are confident that the path to a secure and sustainable energy future passes through the thermal power landscape, and that coal will continue to be an important energy source for many decades to come. Given India's economic growth prospectus, we anticipate power deficits to arise once again as demand improves across the nation. Government has already given a target of 80 gigawatt of additional thermal power capacity to meet this demand, and now this target is being raised again to 95 gigawatt in view of emerging trends. This gives rise to a very attractive opportunity, and financially strong and experienced private sector players are ideally positioned to capitalize on it. With this vision, we have locked in the supplies of boilers, turbines, and generators for the entire 11.2 gigawatt new capacity addition. We are also tying up contracts for erection and commissioning, balance of plant, etc. in a phased manner for the upcoming projects. As you would be aware, we already possess all the land required for the expansion, which is a result of the foresight employed in identifying this opportunity in advance and acquiring the right resources at the right locations. We are funding these projects mostly from our own cash flows, which removes the reliance on project lenders. We also have a proven in-house project management capability and experienced team, which will help us monitor and execute these projects efficiently. We have achieved rapid progress in project execution of 4,800 megawatt of capacity expansion out of our targeted addition of 12,520 megawatt by 2030. The ongoing phase 2 project at Mahan in Madhya Pradesh has already crossed 66% of execution, while the Raipur phase 2 project in Chhattisgarh has crossed 25% and Raigad phase 2 has crossed 20% within a short period. We have also received environmental clearance for the Korba phase 2 expansion revival, which will add 1320 megawatt capacity upon completion. On the PPA type of front, we have recently signed a long-term PPA with Uttar Pradesh Discom for 1600 megawatt gross capacity, which brings our fresh capacity tie-up to 4520 megawatt. We are also bidding for various large PPAs in states such as Bihar, Madhya Pradesh, Rajasthan, Uttarakhand, etc. We are highly confident that our unparalleled competitive advantages, coupled with the early mover advantage that we also possess, will help us to succeed in these bids. As we have mentioned earlier also, when the Discoms invite these bids, they indicate the mines from which coal will be supplied to the project. These coal linkages will be provided from mines earmarked for the states under Shakti policy based on their requirement. The new risk mitigated model of the PPA will generate attractive returns for the developers that are able to set up projects on time with a control on capital cost. In conclusion, we are highly enthused by the thermal power investment opportunity. We are sure that it will continue to play a key role for supporting India's economy for the foreseeable future, and that Adani Power will play a key role in attaining the targeted capacity addition of 80 gigawatt or more by the country. In conclusion, I would like to thank you, our dedicated team, our partners, and our stakeholders for their support. Together, we are building a sustainable and prosperous future. Thank you, and over to you, Dilip.
Thank you, Kalia sir. And good afternoon, ladies and gentlemen. It is my privilege to present Adani Power's financial performance for the first quarter of FY26. I am pleased to report that despite a challenging operating environment, Adani Power has delivered another quarter of robust and resilient performance. The recent slackness in power demand affected offtake of power under PPAs by Discoms. It also affected tariffs in the merchant market. However, Adani Power was able to beat these trends with higher operating capacity and short-term tie-ups for the merchant capacity to deliver results in line with expectations. These results underscore our financial discipline and strategic foresight in navigating market volatility while maintaining profitability. Talking about the financial performance for Q1 FY26, let me begin with the headline numbers that already been said by Kalia sir. in his court. Now, the total continuing revenue for Q1 FY26 was 14,167 crore, slightly lower year-on-year compared to 15,052 crore in Q1 FY25 due to softer merchant tariffs and imported coal prices, but it's stable consequently compared to 14,522 crore in Q4 FY25. We were able to exert control over the cost of fuel at 7,319 crore in Q1 FY26 as compared to rupees 8,074 crore in Q1 FY25. This compares favorably with the trend in continuing operating revenues between the two periods. Operating expenses have gone up from 852 crore in Q1 FY25 to rupees 1,105 crore in Q1 FY26, and this is primarily due to the acquisition of 2,300 megawatt capacity under the inorganic route, but it also includes the impact of higher CSR expenses. Continuing EBITDA came in at rupees 5,744 crore, reflecting our ability to manage fuel costs and optimize operation even as we expanded our footprint. It was higher in comparison to rupees 5,098 crore for Q4 FY25, but lower in comparison to rupees 6,290 crore in Q1 FY25. Depreciation for the quarter increased to rupees 1,105 crore in Q1 FY26 due to the recent acquisitions. We maintained tight control over the finance cost, which was reported at rupees 857 crore in Q1 FY26, despite new acquisitions and increased scale of operations. Our profit after tax for Q1 FY26 stood at 3,305 crore, a strong result despite lower merchant tariffs and elevated operating expenses following recent acquisitions. In comparison, the PAT for Q4 FY25 was 2,599 crore and for Q1 FY25 was 3,913 crore. Our judicious use of cash flows and emphasis on maintaining low leverage has kept the debt levels low even after considering the ongoing capital expenditure and some bridge financing. Total debt as on 30th June 25 is rupees 44,372 crore as compared to rupees 38,775 crore as of 31st March 25. The liquidity of our operations remains high with robust cash accruals. As a result of this, net debt position is rupees 37,437 crore as compared to rupees 31,023 crore for the 2 quarter ends. We have also mostly retired the cash flow accommodation received from promoters in the form of unsecured perpetual securities. During Q1 FY26, we have repaid 2,579 crore of UPS against principal amount, and the outstanding balance now is only 478 crore. All in all, we have ended the first quarter of 26 with a strong financial position and ample liquidity. We have been able to demonstrate the stability and resilience of our revenues and EBITDA conclusively during the quarter and followed thorough on our strategy on self-funded debt-light growth. As Kailash has already said in his speech, we have already received more than $500 million payment from Bangladesh Power Development Board towards outstanding dues in June and July. The customer has been paying us regularly. Another key development during the quarter was the amalgamation of Adani Power Jharkhand Limited. This brings the 1600 megawatt Godda plant into APL standalone entity. This has led to an implicit credit rating upgrade of Godda to AA stable, reducing finance costs. As we know, that India's power demand is growing strongly even after taking weather-induced variability into account. There is a clear-cut requirement of more thermal power capacity to meet anticipated deficits, and we expect that the additional capacity required will go from 80 to 95 gigawatt, as Kailash said in his speech. In closing, I want to emphasize that Adani Power is strongly positioned for the future. Our strong balance sheet, strategic acquisitions, and disciplined executions are driving sustainable growth. We remain committed to delivering reliable, affordable, and clean energy to power India's progress. I would like to request the moderator to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhinav from ICICI Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity. My first question is, the company has given an order of about 65 billion to BHEL. What does it exactly entail, given that, all our equipments are already been tied up for the upcoming capacities?
Yeah, sure. Thank you for the question. So as you know, that there is huge demand of 80 gigawatts of, the thermal-based power load, and by 2032, and this will increase from 80 to 95, what we are expecting. So we are currently in the evaluation phase, exploring various opportunities for expansion. Once the plan is, ramped up and aligned with our strategic goal, we will, share all the updates with concrete numbers, so in due course of time.
Understood, sir. And apart from this, have we given any other order to any other player regarding related to the equipment?
Yeah, that's what I said. No, we are currently evaluating all the the options available, and we are evaluating these numbers, units, the growth requirement in the country, and it will work out, and then definitely we'll come with all these numbers.
Understood.
Sir,
yeah. Also, on the second question is on the recently acquired Coastal, Lanco, and Vidarbha assets. Like, how have the operations been? Are you facing any challenges? What is the PLF? And for these 3 acquired assets, what is the EBITDA we can expect?
First, the technical part, Lanco, we have very less challenge except a small issue related to ash disposal, so which we are taking care of. The second is the coastal. One unit we have already done complete overhauling, and after the complete overhauling, I think machine is now at par with any other power station. Another machine we will be taking for complete overhauling in the current month, and once that complete overhauling is done, this machine will again become at par with any other good maintained assets. It has taken some time because of that. After we took over, we have to place the orders for the equipment, spares, etc. And obviously, these are the machines not of domestic make, so it takes some time to get the spares, and therefore we have to take some time. But once this overhauling is done, then there will not be any further challenge as regards to the coastal is also concerned. And thereafter, we expect that it will have a full availability, the normal availability. So Lanco is already addressed. The coastal will get addressed by end of this month. What was the third one?
The Vidarbha.
Vidarbha, again, obviously there was a challenge because the station was in shutdown condition from 2018. But as soon as we have taken over, we have done the advanced planning because this was undergoing the NCLT process, and we were the highest bidder for a long time, and therefore we had done good planning in advance, and now the machines are already properly overhauled and they are good to give a normal availability. So there is no challenge as far as Vidarbha is concerned also. Thank you.
Understood. So my final question is, what was the merchant realization in the first quarter and outlook for this year, merchant outlook?
So our merchant realization for first quarter, was 6 rupee 51 paise per kilowatt. As against last year same quarter, it was 7 rupees 60 paise.
So merchant rates during first quarter are obviously much lower than as compared to the last year same quarter because of weather conditions, which we mentioned in our initial remarks. And as you are aware that this year monsoon has come in the month of May itself, and there were weather disturbances in the month of April also. So April, May, June, and entire quarter was, from the point of view of power demand, was very sluggish. And since the monsoon has come early, we are of the view that the monsoon will go also early, and therefore we think that the outlook of even the second quarter will be better than the last year because of this reason that last year the monsoon was delayed and the impact of monsoon was in the second quarter. This year the impact of monsoon is more in the first quarter. So second quarter onwards the demand should pick up, and we feel that there should be a good demand and consequently the merchant rates. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Aniket Mittal from SBI Mutual Funds. Please go ahead.
Thank you. First question was just to understand, given the latest ruling for FGD, does that change our CapEx expectation?
Sorry to interrupt, sir, but there is some kind of disturbance in your background. Could you move to a quiet area?
Am I audible now?
Yes, sir.
Okay. With the latest ruling on FGD, how does that change our outlook on CapEx for the under construction plants?
Your question is not very clear. Can you repeat it? FGD.
Yes. So, like I said, with the recent ruling on FGD, does that change our CapEx estimates or outlook on the under construction projects?
Yeah. Okay. I think there is a lot of noise in the background, so okay now.
Yes, sir, go ahead.
So after this notification has come, obviously the power stations which are under planning and execution, where we have not started the execution of FGD, there is no requirement of FGD now, and therefore we will drop the FGD expenditure from those power plants. And two power stations, in case of one at Mahan and another at Raipur, we are in advanced stage, and therefore we will continue to execute there. In rest of the power plants, we will not execute, and to that extent, cost of capital will go down, project cost will go down. Exact numbers, it would not be appropriate to discuss the project numbers in detail or the bifurcation of the project cost. Thank you.
Sure. The other question was to understand on these upcoming tenders that you talked about, Bihar, Rajasthan, MP, Uttarakhand. Which of these tenders have the requirement where the plant needs to be set up in the same state? Is that the case for all these tenders, or does it vary?
So your voice is breaking, getting lots of disturbance.
Anyhow, the Bihar, the tender is, the project is to be established in the Bihar itself. In case of Rajasthan also, the present tender condition is to construct the power plant in case of Rajasthan itself. As regards to MP is also concerned, MP is also, the power plant is to be constructed in the state of MP. These are the broadly the tenders in market. In case of Uttarakhand, the project location is not specified, so project can be anywhere in India. So this is the broadly the position of the tenders.
Okay, understood. Just one last question. What was the PLF for Godda during this quarter?
It was during the quarter, the PLF for the Godda was 73%.
Those are my questions. Thank you.
Thank you. Before we take our next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Jainam Jain from ICICI Securities. Please go ahead.
Good evening, management. Thank you for the opportunity. So my first question is, what is the revenue and EBITDA guidance for FY26?
Sorry, can you please repeat the question?
So what is the revenue and EBITDA guidance for FY26?
Jainam, we have not provided any specific guidance for revenue or EBITDA. See, one thing is the revenue is a bit variable because a part of the PPAs are linked to the tariffs are linked to imported coal prices. Secondly, the EBITDA also, we have not given any guidance, but what we have said is that our EBITDA, the current business model, and the tie-up structure actually gives us very stable revenues and EBITDA margins. So till the time our capacity expansion takes place, you can expect similar EBITDA margins as we have recorded in the last year.
Okay, sir. So what is the status of pending validation and final settlements of alternate coal compensation from Haryana Discom, and by when can we expect the closure?
Your voice is not very clear. Can you speak a little bit further far from the mouthpiece, please?
Hello. Am I audible right now?
Yeah.
Sir, what is the status of pending validations and final settlement of alternate coal compensation from Haryana Discom, and by when can we expect the closure for that?
The discussion is still ongoing, and for the time being, Haryana is making payment of 50% of the difference of bills which we are raising, and therefore we are also accounting for only 50% of the amounts which we are getting. And discussions are going on, and we expect that the issue should be get resolved soon.
Okay, sir. So my last question is, what is the total current total of regulatory receivables outstanding, and what proportion is under dispute, and what is in the process of realization?
So the second part of your question is what?
What proportion is under dispute, and what is under the process of realization?
There is hardly anything pending now, which is, let us say, substantial, except that small regulatory changes coming frequently, and therefore we may be raising those issues or claims in regular course. But there is no substantial claim now pending which can change the, let us say, revenue or profitability substantially. Not very significant. Thank you.
Okay, sir. That answers the question. Thank you so much and all the best.
Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Nirav Shah from GC Holdings. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. Most questions have been answered. Just two remaining questions. One is, sir, we have repaid 2,580 crores of unsecured perpetual securities. This is towards the principal, but any distribution that has been made in the first quarter over and above this amount?
Yeah, so you rightly said, Nirav bhai, that 2,579 crore we paid, I guess, in principal. Apart from that, we also paid 1,146 crore against, it's as distribution.
As distribution.
So now we have only 478 crore pending. That we paid in July. So there is nothing, so no pending so far perpetual equity is concerned.
Got it.
It's nil now.
And any further distribution made in July along with this, or now it's almost done?
In July, we have paid balance amount of 478 crore, so including distribution. So there is no, there is no outstanding, including, distribution.
Got it, sir.
It's now, nil.
Sure, great. And sir, second question is, any target commissioning date for the Dhirauli mine, which is supposed to be in this year?
We get the production should start by September or October somewhere. So we are on time as per the plan which we gave earlier.
Great. Thanks, sir, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ask a question, press star and 1 at this time. The next question is from the line of Nidhi Shah from ICICI Securities Limited. Please go ahead.
Yes, thank you so much for taking my question. So, my first question would be on the PPA that we recently signed with the UPPCL. So, could you please elaborate on the tariffs that we have signed with PPA at, and consequently about 100 megawatt of capacity in that plant which we have signed the PPA for remains unsigned. So, are we looking to sign that, or are we looking to convert that for merchant purposes? And could you also talk to me a little more about where are we in the process of PPAs for our other upcoming capacities? Are we looking to add further PPAs?
I think you can break down your question in smaller questions because not getting exactly what is your question.
So first question was on the recently signed PPA with UPPCL. So I wanted to know what was the tariff of that PPA. That was the first part of the question.
Yeah, we have signed the PPA with UPPCL where the capacity charge is 3.73 and the total tariff is 5.39.
All right. And the remaining 100 megawatt of capacity in that plant, since the PPA was for 1,500 and the capacity 1,600, are we looking to tie up that capacity as well?
No, that is the net capacity of the plant. So when we say 1,500 is after auxiliary. So there is nothing left out.
Okay. And are there any other PPAs that could be signed in the near term in the pipeline for our other upcoming projects?
That we have already elaborated, that the tenders of Rajasthan, Uttarakhand, Bihar, Madhya Pradesh are under process and going on. So as soon as these bids are finalized, we hope that we should be in a better position to win these bids. And obviously, consequently, if we win, we will sign the PPAs.
All right. And lastly, if we see the consolidated debt profile in the PPT, about 6,000 to 7,000 crores of debt has increased this quarter for the existing entities, while it has remained the same for the under construction projects. So I just wanted to know that this extra debt that we have taken on this quarter, what is the purpose of this debt?
So, thank you for your question. Now, so on an average, on annual basis, so our FFO is more than, 21,000 crore.
Mm-hmm.
And then in next 5 years, it will be more than 1 lakh crore. So our capex program is, so of that amount only. So we will, generate sufficient amount of cash flow, which will, meet the requirement of our capex plan. Over and above, we will also generate additional cash flow from the projects, and the plant, which are, under construction. Now, recently, we took some interim bridge fund from the bank. That is only to meet the requirement of our, capital. This is for interim requirement of, expense and capital expenditure. That is for interim requirement purpose only.
All right. So what can we expect the debt profile to look like going forward for the rest of the year? And are we expecting to take any further debt for the under construction projects?
Yeah, as of now, what we are anticipating that our internal accruals will be sufficient to meet our capacity requirement for the year.
All right. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah, as there is no question, thank you so very much. But still, if you have any question, you may please connect Nishit Bhai or me. We are always available to respond you. Thank you. Thanks a lot for your time and attention. Thank you.
Thank you. On behalf of Adani Power Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.